Everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 18th of June, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the 4th week of June. Let's begin with spot gold, where after a strong push-up on the Friday, the week before, where the CPI figure came out stronger than expected, and it was turning out to be an inflation hedge initially. But on the Monday, it quickly reversed and fell way past below the low of Friday and dipped down a bit lower on Tuesday before climbing back up, even with the expected rate hike from Federal Reserve, and which turned out to be a bigger quantum than expected. 75 basis points is instead of 50, but because it was already oversold and it managed to recover back up into the daily 200 EMA, but on Friday it pulled back into the support zone again, the initial support zone of the 21 pip retracement of this swing move down, and it's still being boxed in, although it did dip lower, but then it managed to climb back into the consolidation zone again, and this turns out to be a very strong resistance level at this previous swing high, I believe. Let's take a quick look here. That was the swing high all the way back here from last November. And that level, I think I should mark this level here now. It's the high of 1877.13. Okay, this was one key resistance level here. So there's another one, 1877.13. Let's extend this out. Okay. So this is turning out to be a very strong resistance zone, and it did not manage to break above that to get to the 50 pip retracement and the round figure of 1900. But it's been settling around the 1850 range, just hovering around that level. 21 pip retracement is still interim support level, and the key support is still safe right down at this swing low, and that's already below 1800. So for now, that's a safe support level if it does get down there. So this week there is exposure again from the Fed chair This time he has a 2-day testimony. And we'll see whether there's any trigger to help spot gold to break out of this box here. Otherwise, it's going to be further consolidation, or albeit a wider range now. That's about 700 pip range. Right. And yeah, I think we could move this back up to the 1800 zone. I think this is going to be a key support now. It has not been able to test it since last month. That's a key support zone now. And of course, 1900 is the next significant resistance. Let's take a look at the weekly time frame, where it ended up with a long wick, but still a bearish close. This could be further consolidation. It doesn't seem to be able to break out of the box just yet. Right, so let's also take a look at the US dollar index and to see what the price action was around the FOMC rate announcement. So here's the US dollar index, the DXY, and right from the start of the week, it had already gapped up after the strong CPI figure, gap up higher and cleared the 105 for a day until the Wednesday's FOMC decision, where it did attempt to climb higher, but it was quickly rejected and pushed back down, and attempted to recover on the Thursday, but still was rejected back down almost to the support zone at the 50 fib before recovering on the Friday. So it did recover back up to close to the open of the week at the 200 fib here. So it should have closed slightly bullish for the week. And yeah, just a small spinning top or almost a doji here. So it could be a pause, just like the euro. Could be a pause, or could signal just consolidation. So unless there's some new news from the Fed chair's testimony on Wednesday and Thursday, it's unlikely that it's going to break out higher to hit the 106 for now. Otherwise, it's going to be unusual if it did fall through the support or the low of last week. So it may remain within the range of the wicks for last week. So the 105 is still a major resistance. And the 50 fib retracement, we could also move this fib now to the recent retracement, and it did find support at the 50 fib retracement. So that's where the support is going to be, and it could move this key support zone now to 102 as the daily 55 rises into that area. And right above, we'll have the 106 as resistance. It may take a while if it does break out higher to get up even to the next fib extension. But for now, I think looks like it's probably time for consolidation and to absorb all the news from last week, last couple of weeks. All right. So yes, from the US side, the major news was just be the Fed Chair Powell's testimony, and we'll see if there's anything new that he's going to discuss or announce. All right, let's move back to the other major pairs. Let's move on to the dollar yen, where there was a strong bullish close on the Friday, but before that, it did climb up to attempt to break above the 138 fib extension of this reversal move, but was blocked and fell lower. That's after the rate announcement. It was already moving up higher before the news, so not unexpectedly has returned lower, but it was a significant retracement and a sell-off back to almost test this swing high. So that's the key support. And then after finding support, it managed to recover very strong on Friday, back up above the 135 level. Just closing right there, back up to the near the highs of the week. So still a very bullish close for the week. Let's take a look on the weekly time frame. Yes, it did pull back all the way to almost test that swing high and recovered nicely. And that's also because on Friday, there was the Bank of Japan's rate and policy decision. And in the Asian morning session, so this was the wild swing. It should be about the 200 pip swing here, where the BOJ has remained the same, has not increased rates from their negative rates. And initially it did fall lower, but recovered nicely and continued to climb up, and because of the Japanese yen's weakness. So that's what helped it climb back up to near the highs of the week again. So above that, there's a key resistance. If it does break out higher, it could target the 200 fib extension of this reversal here. And actually, we also could move this short-term fib, and it did dip below 38 fib and climb back up, but that would extend the next move higher. But for now, we'll leave this here because there's a confluence of these two fibs right here at can see this. Yeah, we'll leave this here for now. Next move, extension of this swing move after pulling back into the 50 has already hit the 138. So next target is be the 162 at 137.57. Maybe for now, I could even remove this first. This will be the next target up here, 162 fib. That will be a major resistance zone. And this zone here will this as an interim resistance. Key support is at this swing high and the 131 round figure. We'll remove this for now as well. Okay. So if it does extend higher, it's going to target this 162 fib. But we'll see if there'll be a trigger from XauUsd Powell or whether it's just going to consolidate within this range. All right, so something to watch out for next week. And do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.